5 finance things to do before 2024. And so this is my yearly update of what you should do before 1st of January next year. And last year, I did this video walking along the streets of Milan in Italy. This year, I'm doing it at my new home, new place, brand new beginning. First home in fact. So yes, next year don't know where I will do it. So I want to make this very important reminder video is because some things that if you cross it to the next year, it may not be valid or the deals may have expired. So you want the fastest deals, fastest offers, come and join us at over 18,000 members in the Honey Money SG Telegram group. And with that, let's start with the most important thing, which is CDC Voucher. And for those of you who have no idea what is CDC Voucher, this is like a government support scheme for you to offset your cost of living. And I'm very sure CDC Voucher is not new to many of you. Most of you would have known the January voucher where you can redeem $500 worth. So it's split 50%, half into grocery, which is $250, and the other half 50% into like small hawker shops or marketplaces or small provision shops. And most of you would have known of the January one because it's quite a big amount, $500, right? Just spend, But I'm sure some of you may have forgotten your June also has CDC voucher. And how much is that? It is $300. So 150 grocery, $150 small shops and hawker centers. And I must really let you know that whether your CDC vouchers are from the January batch or the June batch, they will all expire on 31st December 2024. And it is not able to be extended, okay? It is not a physical voucher, and I don't think that any appeals will work. So make sure you spend it all before 31st of December. So what kind of things can you buy with the CDC voucher? I think for grocery voucher, I don't need to explain anymore. Just go to your nearest supermarket, Giant, Cold Storage, FairPrice or Sheng Siong, depending on which one is more convenient for you. For small shops and hawkers, I think hawker stores most of you will know, but do you know that you can also use your CDC voucher at like wet markets, where as long as they display CDC voucher, you will be able to scan to redeem. And some of these small provision shop or even hardware shops or even haircut shops, and I heard recently online that there's handphone shops accepting CDC voucher as well. So for those of you who just want to spend, okay, bigger ticket items, this is where you should look for, not hawker. Hawker is quite cheap in Singapore. And I just want to give a little bit personal story because I moved to a new address this year in November. And after I've changed my address with SingPass, all of it is registered, I submitted for an appeal to receive the new CDC vouchers because I collected on behalf of my parents for my old address, because your parents may not be that tech savvy, so you were doing on behalf of them. But if your name has been used to redeem the vouchers before, you will not be able to redeem the next batch, which is what happened to me. So make sure you go and appeal, which I think by the time you watch this video is a little bit late. So maybe for those of you who are moving to a new place very soon, make sure you don't use your name to go and redeem CDC vouchers. Make sure you use your parents' name, parents' SingPass, just to log into your own SingPass to redeem the CDC vouchers if you are going to move to a new address very soon. This only applies to homeowners. If you're renting, I'm very sure whoever is living in the house already take away already. Okay, so that is for CDC voucher. I hope for next year there will be a new round of CDC voucher, then we all can get together and reduce our own cost of living because inflation is really creeping up. My next point I really want to talk about is SRS Supplementary Retirement Scheme. And to be very clear, if you contribute to your SRS account by 31st December, it will offset your chargeable income for the year of 2024. And should you contribute to your SRS from 1st of January 2025 onwards, it will then offset the chargeable income of 2025. So the calendar year is very important. If you want to contribute this year, then make sure you just transfer the balance to your SRS link bank account. That's all. You don't need to invest. You can contribute first one. Then you slowly go and watch my video on what are the best types of SRS investments or other people video or blog posts. Then you yourself can make a decision. But if you really want to offset your 2024 income, better do it by 31st December. And nowadays, opening SRS account is really easy. You just have to go to any of the big 3 local banks. Okay, you can even open the account online right now. And once the account is open, all you have to do is just do like a normal bank transfer from your cash bank account to your SRS bank account. And that's it. Everything will be automated, including the tax relief. Okay, IRAS will just take the record from your SRS bank operator. You don't have to submit and say, okay, last year I did SRS contribution, I should get the tax relief. No need. Okay, IRAS have your records from the bank. so don't need to worry about tax relief portion. Once again, for SRS education purpose, I think that SRS is only for those people who are high income earners and you find it worthwhile to offset your chargeable tax because you may be in a very high tax bracket like 11.5%, 15% upwards, and then you want to offset some of your taxes. When did I do it? 7%. And I know somebody will laugh at this. 7% do what? SRS top-up? Well, it's really one-to-own cases lah. I feel that if you feel that it's worth it, means it's worth it lah. You don't need other people to validate for you. We don't live for others, we live for ourselves. But the other thing is that if you have SRS funds, especially if you have very large SRS funds and you don't know where to invest, then at least what I can suggest is that you put into government-backed securities like, you know, T-bills or SSB. If you really are the low-risk person, if you're higher risk profile, then yes, go all out. Go and invest in whatever SRS can invest in, including stocks, REITs, unit trusts from robo-advisors. Like myself, I do like SRS investments via Endowus platform, buying into a unit trust called BlackRock iShares S&P 500 fund, which is tracking the S&P 500 index. Of course, this is what I'm doing because that's correct for my risk appetite and risk profile. It may not be right for you, so do your own due diligence and your own research, and this is not financial advice. So the next worst thing to not topping up your SRS is that you just leave your SRS funds there and either until don't know when, I don't know, but make sure you take action, okay? Contribute first, then think, do your own research, then next time you can do what you want with your SRS next year. So you see, for SRS investing, it is quite limited, right? You really can only invest in a few areas. You cannot invest in like US stocks. You cannot invest in London Stock Exchange, Ireland domiciled funds, okay? But if you really want to invest in all these kind of stocks and ETFs, where should you go to? My recommendation is go to Interactive Brokers because they have the widest range of markets, plus their low competitive fees and favorable exchange rates. And you know, they can even do recurring trade RSP for you to dollar cost average into the market. That is what I use for the long term, and I'm still using it. So if you want to sign up for Interactive Brokers, you can check out my Interactive Brokers link right here. Number 3 finance thing to do before the year ends, that is CPF top-up. Okay, I know some of you going to say already, why should I top up CPF? Why this idiot asked me top up CPF when he's so young? Look, I know that CPF top-up is not for everybody, but if you are in the capacity to top up, whether to your own CPF accounts or to your loved one's CPF account, I think it's always a very good thing to do it because you're building your own retirement funds. You're not helping to build your government tax reserve, you know, you're building your own retirement fund. Would you rather contribute to more tax or would you contribute more to your own retirement fund? That's all I can say. I'm not sponsored by CPF to say this. And regarding what account to top up, I think there is a divide between whether you should top up your special account first, which is called retirement sum top up to SA, RSTU, or should you voluntarily contribute to your Medisave account first, VCMA. There are arguments for both sides, but here is my take, right? If you really want to prioritize using your Medisave account to pay for insurance premiums, CareShield Life premiums, and you know, all these things that can be utilized during your working years, yes, then you can prioritize VCMA first. But if you really want to maximize your tax relief, like you want to have the longest runway for tax relief, you want to top up $8,000 every year, then you should go for special account, right? Because you have a longer runway to do all these tax relief top-ups. That is just my suggestion as a CPF observer and how I study the CPF system over the years. But you may have your own arguments and your own analysis. Just go with what is comfortable to you. By the way, the limit is combined $8,000, whether it's to your SA or to your MA, and then to your loved ones is another $8,000, so a total of $16,000. But if you really want to just top up to your own self, is $8,000. Don't contribute more. You contribute more, got no extra tax relief. Anyway, since we are on the CPF topic, I have to remind you that next year the special account will be closed, so there is no point to really go and do what CPF shielding strategy. Okay, that is all in the past, and I will not mention it again. Number 4, finance thing that you should do depend on what status you are. For employees, please go and submit your business claims, whether it is transport claims, meal claims, travel claims, or you know, just make sure your company accounting is in order, because I have been an accountant before and I always have to chase people, especially large ticket items like business travel, to go and file their claim because we are in the end of the accounting period. We really need to get this straight. So please don't make your accounting and finance department susah. Then for self-employed people like my past self as a sole proprietor, you all also need to do your own bookkeeping one. Don't everything anyhow record because you will need receipts, especially if you want to do claims and then IRAS want to check you one day, especially all you financial advisors and property agents. Make sure your bookkeeping is in order because all your business expenses are, if you never record properly, if you never do bookkeeping properly, how are you going to offset against your revenue? And then you say you have proper accounting standards and methods. Where got? If IRAS find you, you kena. Don't say I never warn you. So make sure all your bookkeeping is in track, especially by 31st December. Business owners, that is me, okay? Need to make sure the accounting really in order. If you have accrued revenue, if you already delivered the product, you have delivered the work, and your client haven't paid you, you really need to accrue the revenue. Singapore works on accrual basis, not cash basis. Not when you receive cash, then you record as revenue. Very important. FRS, Financial Reporting Standards Singapore. As an ex-chartered accountant, it is my duty to also inform all of you to really accrue correct in the right year. Okay, don't go and under accrue or over accrue. Okay, this is very serious accounting regulation. So I've covered 4 things. Let's talk about my last finance thing to do for 2024. Keep it lighthearted lah. Come on, I haven't talked much about credit card nowadays, but you all really should remember HSBC Revolution is going to exclude travel MCC from 1st January onwards. So if some of you really want to consolidate your HSBC points on, you want to hit the next tier for redemption, okay, then make sure you complete your booking by 31st December on HSBC Revolution. Next year is going to be a very useless card, alright? I know that they nerf a lot on HSBC Revolution already. So many nerf until I forget. Anyway, I already cancelled the card long time ago, so I already forget the benefits. But for some of you who are still using it, you can still use it for department stores like Haymax Voucher. You know Haymax? Yeah, sign up for Haymax. Get some Haymax miles. And yes, MCC 5311 still eligible for 4 miles per dollar. But that is not all for HSBC. Okay, this is the more important one because travel excluded. And then just when you thought it's over, from what I read from Mile Lion, HSBC just announced to devalue their point transfers to KrisFlyer. So previously you only need 25,000 HSBC points. Now you will need 30,000 HSBC points from 16 January onwards. What the hell? As if their card is not doing bad enough. Now need to throw in another towel. So very jialat, very jialat. Next year I really don't know how to push HSBC card already. Anyway, 2024 has been a very significant year of credit card nerfs lah. I think I covered so many more nerf videos this year alone. Next year, hopefully there is no more like big major nerfs that can change my credit card strategy. Although I know it's going to happen again, okay? I already foreshadowed that this is going to happen, and once I put this video out, most likely something is going to get announced on 1st January. I don't know anything I just guess only. So keep your fingers crossed. If there are any updates, I'll let you guys know. But most importantly, these 5 financial things that you should do before New Year. Number 1, spend away your CDC voucher. Number 2, do SRS Top-Up and invest when necessary. Number 3, do your CPF Top-Up to yourself and your loved ones. Number 4, proper accounting, whether you are an employee, self-employed or business owner. And finally, for HSBC, please book your travel bookings if you are still doing the HSBC Revolution card, and take note of the changes of devaluation next year. And that's it for my last few videos in the year of 2024. Let's look forward to the year of 2025 for more prosperity, more credit card benefits, more wealth, more financial independence, more CPF, more higher income, and less cost, less expense. And one more good news is that I just became a millionaire in 2024. So if you haven't watched that update, you can catch that update video right here.